Hello guys, welcome to this video about where is your next trade. In this video, we'll be looking at how we could quickly generate winning trades based on news or macro views. As an American investor, you will ask, where should I put my dollars? As a European investor, you will ask the same question. What should I do with my euros? Same for a Japanese investor or an Australian investor or any investor in the world. So as an investor, you will have a natural bias to put your own money where you live and having the same currency where you're based. But as an investor, we should be looking at many opportunities across the world. Why? Because with globalization, big companies trade globally. So when looking at companies' revenues, we should be looking at those different trends. We should be looking first at the world economy from the top, then looking at the local economy, the sector of the company, the industry of the company, and much more details. So we scroll from the top and we go down. In other words, we should ask ourselves, what is the company selling? What are the sales per businesses? And importantly as well, where they are selling. So this is the sales per regions. If you look at the S&P 500 geographic revenue exposure, you can see on the left-hand side with the revenues in green that 60% of the revenues from those companies are coming from the US. But the blue one is telling you that 40% of the revenues from the companies listed on the S&P 500, which is the US benchmark, are coming from international sales. So that is quite a significant number. In other words, when we are looking at US companies and when we are looking at buying into US listed company, the reality is 40% of their exposure will not be in the US. So that means 2/5 of their exposure is non-US. Here, this is a chart of the world GDP. The world GDP divided by country. United States makes roughly 25% of the world GDP, followed by China with 17.4%. Eurozone with 15%, and Japan, Germany. So why is it so? Because the biggest GDP is the US, and then we have 60 to 65% of those 5 countries or zones that are making 65% of the world GDP. So it is very factual. When we look at companies, the reality is they are very rarely only selling in their own country. That is very true for big market caps, for companies that will have a market cap above 5 to 10 billions, where most of the time, some of the exposure, a significant part of the exposure will be not in their own country. So looking at this, what is the easiest way to hedge our trade or take a directional bet? I found over the years, and it's even more true these days with the access of passive investment, that country ETFs are very helpful. So what is a country ETF? That is an exchange traded fund or an ETF, which is a basket of securities. That could be stocks, bonds, currencies, or commodities. With an ETF, it will invest specifically in foreign-based securities. So it trades like stocks with the benefit of diversification. So this is exactly what we'll be looking at. The ETFs mentioned today will be ones that are denominated in US dollar, which are very liquid and as well have options if you want to trade through options. So let me give you first an example with the Australian ETF, which is called EWA, which is traded in the US. You can be obviously, as a retail trader, trading this line for anywhere in the world. So let's look now at more detail of this ETF. This ETF's got a market cap of 1.5 billion, which is good enough. So decent liquidity, where we got the total assets, again, 1.5 billion. That is representing and should be replicating the Australian index. That if we look into the next slide, we are always interested when we look at an ETF in which what is the ETF holding. In the case of this EWA, which is for Australia, you can go on Yahoo Finance and looking at the weighting of the members. And we can see here there are many, many banks. Bank of Australia, Westpac, National Australian Bank, and as well miners. So when we buy or sell EWA, which is again the ETF for Australia, reality is we're going to have a lot of exposure to miners and a lot of exposure to Australian banks. So each time we want to have an idea, we want to be putting the trade based on our global macro, we now have the possibility, which is very different from 20 years ago, or even 10 years ago, where we didn't have that many ETFs, we are able to have exposure to that specific country. So you know already the SPY, which is for the S&P 500. You get the EZU for Eurozone, for instance. You get EWJ for Japan. You get FXI for China, or EWZ for Brazil. So for almost any country, you will get an ETF. So here, I give you some of the tickers that probably is going to be helpful to you guys. Looking at 3 different regions, looking at America first, where we get most of the big countries ETF, then Asia and Australia, and then Europe plus part of the Arabic countries. So again, very helpful if you want to have a view, if you want to put a position based on the country, starting with an ETF. So what are the winning trades here? The first winning trade is obviously hedging an existing position. That could be done on the global portfolio or a specific exposure. So let me give you an example. You are long a company in the US, which has 60% exposure to US through its sales and 40% exposure to Europe through its sales. So what you will be typically be doing is you'll be doing long the stock, 60% short the SPY, and 40% short with the Eurozone ETF. So that is for your hedging. The second thing that you can do is obviously taking a directional position based on macro. So here you will be looking at the GDP trends and the different leading indicators. So as you will be seeing, for instance, that one region is expected to be outperform another region, you will be doing one long versus another. A typical trade will be long, if you look over the last 20 years, being long the US versus the rest of the world has been working pretty well. But if you look over the last few weeks since the start of 2022, actually Europe has been outperforming the US. And finally, you can be obviously taking directional position on geopolitical news based on elections, wars, or central banks. So those are the examples that we're going to be taking right after this. So here, the first example that I think it speaks for itself is looking at the Spanish ETF versus the Eurozone ETF. You can see that over the last 10 years, the trend has been really your friend, where the ETF for Spain, EWP, has been consistently underperforming EZU, which is for Europe. So that is a long-term trend. We are talking about a trade that has been lasting for 10 years. And as long as the trend is following this downslope, that is really a trade that you should be on. Next slide is for the Russian one, for instance. So this is to take the example of the recent events that we had between Russia and Ukraine. As you know that the market has been struggling with the potential tensions between Ukraine and Russia and the potential war coming. And as you can see, despite oil going and making new highs, trading above 90 and they being close to 200, the Russian ETF has been really struggling since November. As you can see, it was at 52 at the highs of November, and now it is trading around 40 and reached 33. So from the highs to the lows, we're down 35%. So in other words, if you wanted to have exposure and really reduce or taking a directional bet on Russia coming down based on these tensions, those are typically the trends that you will be doing. You will not have to get exposure in ruble because you will be doing through this ETF, which is USD denominated. And more importantly, you will not be carrying companies a single risk because this ETF will be holding different stocks or bonds linked with Russia. Finally, just to give you another example, I know that many of you are struggling with catalysts. So you come to me and say, look, you know, Greg, I'm not always sure how to find the catalyst. And one of the obvious catalysts is either you got a geopolitical events, if you got a war, if you got an election, and here this is the example of the election. So if we look at Brazil, so Brazil has been struggling since 2009. So here this is the ETF for Brazil, where you can see the down slope since then, where Brazil has been underperforming the rest of the market, has been underperforming emerging market due to political tensions and some local issues. But you have a natural driver, a natural catalyst, which will be coming in October 2022 of this year, which is with the presidential election. So depending on the view that you have, bullish or bearish, obviously, you have this clear catalyst, and you could be using this ETF to play that specific idea. That is even more true, that the beauty of these ETFs that are listed in the US, trading in US dollar, is most of them have liquid options chain. So you could be trading options. So if you are looking for an idea again, and I'm not saying that you should be doing it, but if you look at this Brazilian ETF, which is trading around 33, and you could be looking at options that are expiring around the election or right after the election. The downside of it is obviously the implied volatility might be jumping, and you could be paying some kind of a premium, but you could be as well putting a trade where you do some kind of call spread strategies where you're limiting the cost of the implied volatility. But more importantly, you have a view, you don't know how to play it. So sometimes instead of going for a single name, you go for the ETF and you decide to pick the strikes and the maturities that will come hand in hand when the specific catalyst will be coming. Okay, so today we really tried to look at how in this video, how to generate ideas based on your views, either on the macro, looking at the leading indicators, or if we have specific events. The Ukraine Russia tension is a very good example, but you could be talking about elections, you could be talking about specific events that are happening somewhere. In the next video, we will do something more in depth on the company's level, and we'll be discussing on how to generate successful trades based on geographical exposure on a company's level and which tools you could be using as a retail trader. So as always, I hope it helps, and I'll see you soon in the second part of this video. Bye-bye.